Drill Down Earnings has a look at fourth quarter earnings from Microsoft. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Futurum Group. Fiscal fourth quarter, it ended in June. For most of it's the second quarter. Not for Microsoft, and they're big enough they can decide on their own when their quarters end. Wall Street likes a beat, doesn't like a miss. We like to know a lot more than that, so let's dig into the business here. The actual business story, not just the move in the stock, although there was a move in the stock, and it was initially really down. $64.7 billion in the quarter, up 15%. Think of these numbers, in 13 weeks, $64.7 billion. Fantastic quarter for any company ever in all time. This is a spectacular 15% increase off of a big year last year. Operating income, $27.9 billion, an actual profit of $22 billion in a quarter that is only 13 weeks long again. And when you look across all their businesses, they lump them into three big categories: productivity and business process, intelligent cloud, and the stupidest name ever in the history of business, more personal computing. As if personal computing wasn't enough. Anyway, Microsoft can do what they want because they've got 11%, 19%, and 14% growth in those units. Now, beyond the headline numbers was the problem. Their Azure business, their cloud hosting business, grew only at 29%. But on the heels of some concerns that maybe AI isn't all it's cracked up to be, an AI spend might not be limitless, when we saw that they had guided towards 30 to 31%, they delivered a little better than 29% growth in Azure. Wall Street was worried and started selling the stock as soon as that hit the tape. Now, overall, the results were juiced by the cloud. 15% revenue growth on one of the biggest quarters in the history of all time should be really good news. But for a business that is so dependent on cloud, their entire intelligent cloud business, 44% of revenues in the quarter, that's the thing you pay the most attention to. And the growing cloud business has helped all of their businesses grow. But with a cooling growth rate there of only 19% in the intelligent cloud business and only 29% in their Azure business when they guided at 30 or 31, well, the stock market wondered, what's up? Microsoft sold the stock in after hours. It was down about 5% in after hours trading after being up about 25% in the last year. But that concern was overwhelming in the conference call from analysts asking Microsoft, what's going on? Wasn't the 30 to 31, it was kind of 29 to 30. At a certain point towards the end of the conference call, which I just got off, Amy Hood, the CFO, says, okay, yeah, it was at the low end. We had some softness in Europe. It was non-AI related, and that AI is only governed by capacity constraints, which they're also dealing with quite well. Thank you very much. Here's CFO Amy Hood.
The distinguishing between being at the higher end or at the lower end really was some softness we saw in a few European geos on non-AI consumption. Really, made the difference in that number, and we've assumed that going forward into H1, inclusive of my guide at 28 to 29 going forward. And then let me separate, which was your larger point, which is what are the other factors you see ongoing. Number one, you're right, capacity constraints, particularly on AI and Azure, will remain in Q4 and will remain in H1.
So they're making the deals to provide their customers with Azure because they want Azure, and yeah, it's only growing at 29%, not 30 to 31%. It's just a fantastic quarter. Maybe not what everyone on Wall Street wanted, however. But let's get to one number that tells us a whole lot about this business and how this business is working right now. I've got the Drill Down Earnings Bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Microsoft with Q4 earnings, here's what you really want to remember about the quarter. It was huge, $24.7 billion and very profitable, $22 billion in profit, throwing off tons of free cash flow as well. But the Drill Down Earnings Bite, the one number that tells us a whole lot, is 19%. The overall cloud business grew at 19%. The full business of Microsoft grew at just 15%, and some really big numbers. But 19% growth was not the accelerating, rising growth that maybe some investors thought all of Microsoft might do, just kind of really in the general range of guidance, and that was a disappointment. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And of course, you can find more on X at Cory TV. Check us out on @DrillDownPod on TikTok and Instagram if you like those things, and you should, because they're entertaining. Also, YouTube at 65 Media. We've got all kinds of earnings reports and other technology news. It is rife with information, but leave us your comments. Tell us what you think. Drill Down Earnings, part of 65 Media.